Hello guys, welcome to another YouTube content. In today's video, I'm going to take you through dollar index, gold, as well as Nasdaq analysis. So we are just starting with dollar index, and we are starting from monthly time frame. We want to have the bias from bigger picture. Okay, so we saw the order flow and how bullish dollar was since March 2021. You can see, and we have seen since January 2023. Since December, we have seen a kind of consolidation from the monthly time frame, right? And then we saw this reaction within this order block from the monthly. This is important at times to start looking at the market from the top time frame in order to have clear and better view and understanding. Okay, so this is a daily, a monthly order block. We have this monthly order block, and we saw how they reject. I always consider the body not the weak. We saw how they reject out of this monthly order block, and before then, this buy side liquidity was forged. They forged this buy side liquidity, and after forging this buy side liquidity, we can see we have this very wide open sell side imbalance, and this sell side imbalance came after the market grabbed this significant liquidity, relative equal highs. And then we are seeing this reaction within the liquidity pool. After taking this buy side liquidity, it is significant to see a PDR being formed and be respected. And that will give us the understanding of what the market might do next. And from this price action, after the reaction of this sell side imbalance, this large fair value gap, we can see them willing to drop the price, right? We see this little consolidation, and then they forge the high of this little consolidation and respect this fair value gap, sell side imbalance. Let me delete it since we can see it. They respected this sell side imbalance, and then now we saw the monthly candle, because the previous month candle, that is April, if they are to continue pushing the price higher, should have at least closed at the mean threshold of this order block, and it didn't do so. So this is a very, very significant stuff to see, and it is very, very important to tell us what this month is going to do. And we are seeing already the month has been very sharply. They are willing to drop the price lower. Since this is what we see, the action of this fair value gap CP, and then forge of this buy side liquidity, and then also respecting this bearish order block, we are to expect the market to drop. And this low that was formed, that is the thick formation low of March, month of March, is going to be our next draw on liquidity. So currently we are seeing a very down candle, a bearish candle, meaning we are heavily bearish on month of March. And this is going to be a very, our long-term objective. And our short-term objective is going to be April low. So with that being said, then we go down to weekly time frame. On weekly time frame, we can see this is April 15th, and this is April low of April, previous month low. And this previous month low, when we go to the daily, it tallies with the IBDA data range 20 days low, which we already know IBDA data range is a very, very significant levels where these market makers would always like to actually draw the market towards. So now this is that monthly order block, which we can see on weekly, it is even more clearer, right? It is even more clearer on monthly. On weekly, I mean, we can see a better candle, a better order block, and we can see the rejection. So this weekly time frame is just like a little bit of information from what we saw from the monthly. Then we go down to daily time frame. Going down to daily time frame, okay, we can actually see the price action. This is that monthly order block, how price acted on that monthly order block. We have our swing high being formed, swing low being formed, another swing high, and then this is the other swing high. We have this short-term high because they failed to come and uh, take out this peak formation high from our last 20 days range, either 20 days range. And as I explained earlier, this is our previous 20 days, either 20 days low, which, as I said, is a very significant liquidity level where they always like to draw the market towards. So I already did this analysis with my ongoing mentorship students early this month, 1st of May, and I outlined that we are to expect this low to be forged, and exactly what happened, they come and forge this low, and now our next draw in liquidity is going to be the previous 20 days low. This is an EBITDA data level. And we can see the price action within this area. This is that the monthly order block, and this is a rejection block, a proportion block, right? Because it respected again the monthly order block. So this is a proportion block, and it also served as another proportion block. But on daily, we see it we see it as an order block, which is just fine. An order block that was created after a pool of liquidity. You see this highs that has been forged. So this is a liquidity pool, and we have confirmation of break of market structure. Market structure confirmation in this case is just like green light telling us, yeah, the market is now willing to drop as you predicted. So looking at this rejection block and this creation of another order block, we can see how the market went back and respect this order block so perfectly with just shadow rejection within the like 20 or 10% of the order block, which is a very, very good thing to see. We have this consequence encroachment, concentrate qualification. I mean, what is concentrate qualification? Let me give this out for free. When a PDRA failed and then later on come and hold price to deliver price towards the opposite direction, that is a constant trend qualification. For instance, you have let's say you have this order block, right? You have this let's say bearish order block, and you are expecting for price to return to this bearish order block and sold over, and then the market invalidated that bearish order block, broke it. So when the market broke that bearish order block, the market will return towards the opposite direction, and that bearish order block can serve as support so that the market makers will buy up of that bearish order block. The same thing with bullish order block. When a bullish order block failed to hold a price, that bullish order block can serve as a bearish order block. So vice versa. The same thing with fair value gap, the same thing with volume imbalance. Like in this case, we have this volume imbalance, and they broke up of this volume imbalance, and now see how they are reacting on this volume imbalance towards the opposite direction, right? So this is constant trend qualification, and it also served as a PDRA to support the price moving towards this low that they already forged, and now we have this low as our next draw of liquidity. So looking at dollar index from monthly to daily, we can see that we are heavily bearish, and we have our institutional level to be attacked, to be precise, previous 20 days low. And now currently we can see the market perfectly rejecting up of this fair value gap. So in a nutshell, we are very technically on dollar index, and this is going to be our next draw on liquidity, right? And this is just the technical aspect. When you check the seasonal tendency, you realize we are bearish on dollar in the month of May. Just go and do that assignment. You will come up with this. Well, for gold, I do this analysis with my current mentorship student where we outline this fair value graph can hold price considering this break of structure. It can hold price and we can see this low. Our previous 20 days low is this. We can see this low possibly being attacked, and our previous 40 days low, we can see this low possibly being attacked, and that didn't happen. I also explained to them that this order block, when we see a body candle closing within this order block, right, it can also be a signal that this is not going to sell, it is going to buy and attack our previous 20 days high, this buy side liquidity. So on Friday, that is Friday's price action last weekend, and then within Monday, we saw this candle rejecting perfectly within this fair value gap, bullish fair value gap. Considering this sell side liquidity forge, I'm not considering this. I'm not considering this order block. This order block to me is invalid. So, but this sell side liquidity is enough to support this fair value gap, to hold price, and to help us see price going to attack this buy side liquidity instead of coming for the previous IBDA 40 days low. So this fair value gap, this reaction we saw on Monday, plus the weekly profile, we know plus the weekly power of 3 profile, we know if the week is bullish, we are to expect market on Monday to sell, and then probably Tuesday to form the low of the week, that is 75% of the time, and then Wednesday, Thursday, and Friday should be expansion. So this is close to exactly what happened here. On Monday, we see the market selling, and then on Tuesday fell to form the high of the the low of the week, but that is just fine because this reaction we saw up of the 50% equilibrium of this fair value gap. Had it been to say this candle closes below this 50% of this fair value gap, then I would expect the market to invalidate the fair value gap. But this reaction give me that give me that belief that they are not going to invalidate this fair value gap. And exactly Tuesday, we start seeing the narrative changing, the reaction we get off of during London, off of this fair value gap confirm, especially when you go to lower time frame, 1 hour, you see that break of structure, confirm that this fair value gap is going to hold price. So without the invalidation of this order block, I quickly change my bias, okay? Because at times you need to change your bias. You don't have to marry a bias. What the market presents is what you will actually have to work with. So this is the bias belief, and I shared this analysis on my Telegram community. If you are not inside the Telegram community, you can join. I already shared this since when the market closes with this candle. I already shared this analysis, and we are expecting this sell side liquidity to be attacked, which was already attacked, and now we are expecting the IBDA 20 days high as our next draw on liquidity. So next week we have a very clean price action. We have a very clean bias. We have this order block. As I mentioned earlier, I always consider the body. So we have this order block that we can expect to actually serve as support. We can expect to see the market retracing back a bit. This is my expectation, to see the market retracing back a bit and then going for this buy side liquidity. And the market can just open and decide to take this buy side liquidity, but this is where I would be more interested in taking position when the market finally come back to this order block. So this is what I have for dollar index, for gold, weekly time frame. And for Nasdaq, honestly, let me not talk too much. For Nasdaq, I don't have a bias at all. I don't have bias for now. I don't know if they are going to respect this fair value gap, keep on going, or after purging this side liquidity, they are going to make retracement. I don't know what exactly Nasdaq want to do. So I don't have bias on Nasdaq, but I do have bullish bias on gold. I also have a bearish bias on dollar index. So this is what I have moving forward. And when you check the seasonal tendency, as I said, it is exactly supporting what we analyze technically here. If you are not a subscriber of YouTube channel, please do subscribe, share, comment, and like. Also check the video description. There are amazing bonuses you can get, discount, and a lot of more information that will be useful for you. Thank you for watching. See you next time.